Welcome back to New Money. This evening we're discussing investments. My guest is David Shapiro, and if you'd like to email, you'll see my details on the screen. David, just coming back to the 2 points. The one point you were talking about AI, and you were talking about where that's going and how you see things going forward, and then you commented we may not see the same sort of returns. Could you expect global returns in this coming year to achieve 7 to 9%?
Oh yeah, that's easy. Not 20. That's why I'm saying set the bar low. You don't have to set it high. I'm hoping that we get above 10, but I think that there's enough energy in the markets, there's enough momentum to get us over 10% in global markets. Rates are coming down, remember? Despite what Trump is saying to Powell, I think inflation will be brought under control. The US will reduce rates. I think growth will start to pick up there as well. And we'll see the economy, the global economy, together with all the benefits that are coming from AI, I think lifting the US economy, which does have a rub-off effect on other economies. The other one, and that's why I want to bring it in as well, South Africa, when I say South Africa, commodities are looking interesting, which I haven't seen before. The copper price, we know, because a lot of stock has gone into the US, copper price $13,000 a ton, which is record levels. I'm not worried about gold and platinum, which are more hedge funds, but we're starting to see copper, aluminium, other metals taking up. And there's a much more positive attitude towards infrastructure building, and issues like that, which I think could, especially in the new economy, which are driving commodity prices up. We're seeing the deal, Rio Glencore. We've seen Anglo's Tech, some big deals in the commodity sector, which I think are pointing towards consolidation, but more profits for those businesses, as they start to position their commodities or their businesses around where they see the world going.
And it is the world, not South Africa alone. Because I said to you early on, I'm talking about a new investor, says I've got a long-term time horizon, 5-10 years, here's a lump sum. You decide how much goes overseas, how much stays here, how much is going overseas.
Well, you see, I'm much more business related. I like to buy companies. And that's a dilemma with me at the moment. So most of my businesses that I buy, most of the companies I buy would be foreign. But I'm starting to look from a South African point of view once more at maybe the commodities, maybe a BHP. I don't know whether Rio's and Glencore are going to merge. You've got two very strong managers. Who's going to be the leader there? So there are a couple of hot spots. Companies like Kumba might be starting to look very attractive. We've seen their iron ore price going up. So I'm starting to look at that area of the market. I still think there are a lot of issues at the bottom end, South Africa related. I've still got to see that coming through, whether our retailers look incredibly cheap, relative to a market which might recover. If you've got a little bit of speculative urge about you, I think those are looking very cheap and could move off the areas. Banks are always steady.
David, you wouldn't bring money back?
No.
We just talk about new money, maybe there'd be a slight change in philosophy. So let me ask you the question of AI that concerns me. The numbers I've read, and you can confirm them, is that in the last 15 months, $600 billion has been spent on AI.
Yes.
That can't yet translate into any earnings. Because there's a cost. So if you look at a balance sheet, there's a cost of AI. And it hasn't yet translated into the profit that one expects. So what are earnings going to look like? Firstly, fourth quarter earnings, USA now coming out in January, and then going forward the next 3 to 4 quarters.
They'll be impressive.
Even though there's that big spend of AI without the corresponding...
Yes, analysts will start looking deep. But the companies themselves, first of all, if you look at the semiconductors, they're developing all the time, improving all the time, becoming more powerful, consuming less energy. So you've got technology is moving at a fast pace. Businesses cannot afford not to use them. The problem is that, I don't know whether you use AI, but I'm finding myself learning a lot more. I'm moving a lot speedier. In other words, I've saved absolute hours in terms of searching for information, using it. Now, I'm a small user. When businesses use it, and we've underestimated what it can do for businesses, what it can do for efficiency. You don't even know it. If you look at Netflix, it tells you which movies you like or something like that. You know, how does it know I like these? You know,
I got one this morning.
Yeah.
I watched the movie this weekend,
Yeah.
and this morning I got a note saying, you watch this movie, here are 6 movies in a
Yes.
similar,
Yes.
similar type of period.
Well, can you imagine that? Take that into the retail industry, knowing, you know, how you think, where you're thinking, where you live, what's near you, those kind of things. But I think we've got to take it to different levels, more or less. If we go into the sciences, if we go into the medical profession, the amount, you know, to discover new drugs, having to go through huge amounts of data are going to speed that up. So I can't conceive in my head, I can't even conceive that when I go into ChatGPT and I answer a question or ask them to check a paragraph for me, it comes back straight away. I can't conceive of the speed at which it does it. I don't understand these LLMs, you know, these large language models or something like this. So I'm not the right kind of person to comment on these, but I mean, it's remarkable. And that's why I'm saying it's...
But there's one exercise you shared with me that you can comment.
Yeah.
I know it's early in the year, so I hope you remember. You wanted to know how much gold made up compared to the American markets. Do you remember sharing it with me in November? Share with our viewers what you needed some information.
I needed that, and I updated it because the first time around I got it wrong. Not wrong, I was slightly out. So on Friday, I went back to update it. When we were in November, I found that the total value of the top 10 central banks' holdings came to about $3.1 trillion.
Compared to market capitalization?
Of NVIDIA of $3.1 trillion.
57 trillion market capitalization of the US market.
Yeah, I'm getting mixed up with my billions and my trillions. It was $3.1 trillion.
Yeah.
I've updated that. And the latest figure is $5.9 trillion for the top 10 central. In fact, total central banks holding $5.9 trillion. I asked them outside of central banks, because central banks don't trade dollars. It came back and it said it's $1.3 trillion. So if we put it together, the total gold market is about $7.1, $7.2 trillion. NVIDIA 4.5, Apple 4, whatever you want to do. So total market of total S&P 57 trillion. So it gives you an idea how small the gold market is. Platinum is significantly less, much, much lower than that. So you understand why these markets can move so quickly, because of they're very small, and it's the marginal buyer that can actually move markets a lot. And they're small markets.
And as we spoke about statistics, and I said it can be very misleading, understand, at 1825, when gold was at 3.8, and you've now got gold at 4.4, but you've got a rand at 16.50. In rand terms, the uptick has not been as great as compared to an American. A dollar is a dollar. So the gold price was at 3.8, it's now 4.4. So one needs to also understand, you can't just look at statistics. You've got to understand what is behind those statistics.
We've got to see, I think it's going to be a fairly good year for South Africa, because we've got all these, platinum is a big exporter of ours, and we want to see how much this is translated into extra revenues, and hopefully that filters through to the economy. But even the projections that I've seen aren't great. I mean, at the top end, it's that the economy will grow 2% this year as opposed to 1.8 or thereabout. Bryan, we need a lot more in this economy. That's why I'm still hesitant to get very excited about South Africa. You know, I'm talking SA Inc., not those large companies on the JSE, you know, the Richemonts and British American Tobaccos and so on. So, but I want to see how it's filtered down into the economy, into consumers' back pockets, because that's going to be important.
So, David, we come to the end of the program. There were a lot of emails, but I want to ask you one question. People in the last years have found that they're overweight in many stocks. They're NVIDIA, they're Apple, they're Amazon Holdings, ASML, all those companies. what would you suggest to keep those high weightings?
Me, I'm the wrong person because the question I keep asking myself, would I buy these for a new client? And if I'm buying them for a new client, why must I sell them for an old client? In other
But
words,
would you hold 14,
yes,
13?
doesn't bother me.
So
If I feel the upside is still there, I keep holding.
Okay.
That's not conventional wisdom, and that's not what the.
Okay.
If you've got people who oversee, portfolios, they'll tell you you've got to downgrade. You're too heavily weighted. So I'm saying I'm the wrong person to talk to.
So, Dave, you don't see too many spooks. There will be volatility.
Yeah.
There always has been. And it's always unexpected.
Yeah.
You never know what is going to drive
That's
it.
right.
But thank you very much. Well, we as advisors explain that the difference between income generation and growth investing is not about timing the market, but time in the market. This means if you've been invested in equity markets for many years going forward, your strategy still needs to be long-term, as the markets have no time memory. A lot of the financial press refers to the dangers of investing in markets, and they are right if you have a short-term time horizon. My advice, if we have volatility and your strategy is long-term, ride out any corrections. If your strategy has changed, then you need to talk to your financial advisor about changing your investment strategy going forward. If you've been in the market for 5 years, it's not time over. David, once again, thank you for joining me on the program this evening. It's important to note that our program is to provide information and should not be construed as advice. Next week's program, we'll be dealing with estate planning, and if you need to get hold of me, my details will appear on the screen. I'd like to thank you for watching, and good night.